Welcome, Herman.
Thank you, Joachim, for giving me the floor. So I will speak almost half an hour about good old Europe and the impact of COVID-19 on Europe, and also, of course, on the impact of the virus on the global economy. Let me start. The corona crisis is one of the most bizarre and at the same time one of the most dramatic we have experienced since the war. And many ask me what the difference is between the eurozone crisis that I happened to manage and the current corona crisis. One was about the life and death of our currency and perhaps the life and death of the Union. Today it's about people's life and people's death. Today it's about life and death of human beings. Of course, 10 years ago it was also about people indirectly, their jobs and their living standards. But now it's very direct. And this pandemic has also changed our daily lives. It changed it in a way we never took into account until it happened. I don't know if it will have lasting consequences on our way of life. And if we are facing a structural break in the economy and society, I don't know it. The period of 3 months was probably too short for that. But the virus has not yet been definitively contained. Let's not forget that. In any case, certainly at the beginning of this crisis, there was in our population a sense of solidarity. The feeling we are in the same boat. There was a strong discipline to abide by the strict rules, also because people were afraid. I come back on this word, afraid, fear, later on in this introduction. And we were scared for a reason. Worldwide, and Joachim mentioned it already, there are 450,000 deaths as a result of the pandemic. In Belgium, almost 10,000. Without lockdowns and other measures, there would be 10 times more casualties, 10 times more if we had done nothing. That fear also brought distrust among people. Your neighbor was a candidate infector. And so you have on the one hand solidarity, and on the other hand, you had distrust. And solidarity and distrust seldom go together. But here it was. Politicians had to work closely with the experts. I can assure you another unusual phenomenon. Politicians who knew better made a dramatic mistake. Look at the UK and the US. For me, it's also a lesson in modesty for many involved in politics. This crisis also was not man-made. On the contrary, one cannot ignore the fact that some countries did much better than others within the Union and worldwide. Although it came from outside the corona crisis, but in the handling of the crisis, there were a lot of differences in Europe and outside Europe, but also in Europe. Some countries performing much better than other countries. And it is worthwhile after the crisis to investigate what the reasons of those differences are. The corona crisis has once again exacerbated the inequalities in the world as they have grown within each of the countries. Some people were better protected against the virus than others. Dramatically increased unemployment plays a major role. And if these inequalities come on top of other discrimination and injustices, This has already led to socially explosive developments. Look at the United States, but also elsewhere. So this corona crisis has exacerbated existing inequalities. The lockdown has also exacerbated inequality across workers, with those able to telework generally highly qualified, while the least qualified and youth are often on the front line, unable to work or even laid off. Fortunately, it's another consideration. Fortunately, people were often cared for in the same way within most European countries. At least that was the case in my country. They all received the same treatment if they got ill. However, we know that we need to invest even more in healthcare, especially for the very elderly among us, where most of the victims occurred. We also know that in addition to physical health, there is also mental health. Loneliness is an illness. Unfortunately, the digital world has made contacts possible that did not exist 15 years ago. Imagine this crisis. Without the new technology, the loneliness would have been much greater, and the economic damage and loss of jobs would have been much bigger. But the health crisis is not over, nor is the economic recession, some call it even a depression. All virologists assume that there will be a so-called second wave in the autumn. The only question is when exactly, how big it will be, and how we will dampen the wave. The virus hasn't lost any of its power. It's just because we had fewer contacts that there were fewer infections. As soon as they resume in an unsafe manner, the pandemic returns. We now also know that a few people can cause an exponential resurgence. And by the way, I note that the story of the Spanish flu 100 years ago teaches that the countries that reopen quickly are hit harder, also economically, afterwards. A definitive solution will only come when an adequate vaccine is available for everyone. Hope is allowed that because the effort of the private and public sector worldwide is huge. By the way, under a new vaccine strategy, the European Commission is proposing to help companies pay for the development of potential vaccines. The plan would see the Commission use EU funds to purchase vaccines before the shot has completed testing and is approved for use, in exchange for guaranteed supplies if it works. They take a risk, but they have to take a risk. But at least until deep into 2021, next year, we will have to live with the virus. Until then, there will be uncertainty among citizens, consumers, and investors. There was already uncertainty. There was already fear and anxiety in our society about a range of causes. Think of migration, terrorism, deaths, jobs in the digital world, climate change, and so on. All this is now coming to a climax. We will live during some time in what is called the economy of fear. Initially, many hoped that since the crisis was a one-off accident, the suffering would soon be forgotten and that we would have a kind of V recovery. I am referring to the slide shown by Joachim, where next year's damage in terms of economic growth would already be made good and that budget deficits would fall drastically by themselves. There was a V-recovery on the stock market, but there is a disconnect between the real economy, with the real economy. Nobody believes or hopes that quick recovery anymore. One of the reasons is that consumers and investors do not yet have confidence in the end of the pandemic. Trust is a key word also in this context. It does not help to increase global purchasing power because it may be feared that the propensity to save may increase by half, according to the European Commission. You have more money, but you are saving instead of spending it. For social reasons, one must protect the purchasing power of the most vulnerable in society, but the relaunch by a general increase in incomes is pointless, precisely because there are and will be great precautionary saving. The Belgian central bank notes that households' disposable income will not decrease in 2020. That has never happened during a crisis. So we have a stable purchasing power in this country, and I think we are not the only ones. Again, only a vaccine will dispel the fear. A V movement is also not possible because we are only at the beginning of the economic damage to companies. Some were temporarily kept alive by government measures, but that is not enough for quite a few. The companies that were already in dire straits before the corona crisis and were dragging on a high level of debt will not be able to make it in the event of a too slow recovery. The governments cannot save everyone. And the organization, the Paris-based organization, the OECD, said that, I'm quoting now, those sectors affected by border closures and those requiring close personal contact, such as tourism, travel, entertainment, restaurants, and accommodation, will not resume as before. This will affect potential economic growth in the coming years. And that potential economic growth was already lower in the years prior to the corona crisis than it was prior to the financial crisis. The World Bank said that this global downturn will be the fourth most severe in the last 150 years. And again, the OECD is stating by the end of 21, the loss of income exceeds that of any previous recession over the last 100 years outside wartime. I have not to convince you about the seriousness of this kind of recession. The economic downturn in the world economy is also unprecedented. It's -6%. The recession is a global phenomenon, which was not the case in the financial crisis. I still remember when I was in charge for the management of the eurozone crisis that we experienced in the eurozone a recession, but worldwide there was still a growth in global trade of 3 to 5%. This is not the case in this crisis. The recession, as I said, is global. In a way, it's symmetrical and thus much deeper. In the eurozone, on average, our recession is more than -9%. In some countries, more than -10%. During the banking crisis, emerging economies were spared so that world trade actually continued to grow, as I said. And that's not the case now. That makes this crisis so specific. The crisis is hitting some emerging economies particularly hard. Think of India and of Brazil. Even China is struggling. Hardly anyone escaped the pandemic, and the interdependency is enormous in today's globalization. Politics in Europe did not respond with austerity, as in the 30s and as in the Eurozone crisis 10 years ago. On the contrary, Deficit spending is driving governments to gigantic deficits, both because of the automatic increase in expenditure and the automatic decrease in revenues as a result of the depression. But on top of what we call the automatic stabilizers, you have also voluntary discretionary measures. Governments attempted to stabilize the labor market through a variety of systems of temporary unemployment, by the way, supported also by the European Union, through other support measures such as state guarantees to companies, sometimes to sectors. Usually, this was to avoid too deep a slippage or to prevent permanent damage to people and to companies. In addition, national governments and the EU are setting up investment programs to make the recovery more sustainable. The EU and its member states collectively mobilized in the last 2 months 3.4 trillion euros, 3.4 trillion euros to tackle the coronavirus outbreak and its economic impact, representing, ladies and gentlemen, 25% of EU's GDP. 25%. That's the totality of the effort made by the Union and by the member states. It's an enormous historic response. That investment program may not be the way out of the crisis quickly. We have to realize that. Even if it is necessary, it will not be the way out of the crisis quickly. Before investments can be made concrete, numerous logistic and administrative steps have to be taken, which cause delays, what we call also time lags. Many of the planned investments really come on stream when the worst of the recession, hopefully, is already behind us. And this expansionary fiscal policy was flanked by an exuberant monetary policy with an unprecedented increase in the money supply and low, even negative interest rates. Just to give you an idea, we all know this phenomenon of negative interest rates, but just to give you an idea of how historically low interest rates are. I read it a few days ago. Last month, the governor of the Bank of England said negative rates were under active review, he said, for the first time in the bank's 324-year history, more than 3 centuries. The ECB and the Federal Reserve Bank will maintain this policy for at least another 2 years. It's really all hands on deck. I repeat, the political answer was the opposite of what was done 10 years ago. 10 years ago, it was all about austerity. Now it's about deficit spending. Policymakers were politically aware that in the current circumstances, austerity would only play to the advantage of populists and extremists. So there's also a political dimension on this switch in policies. High budget deficits and the sharply increased public debt will sooner or later have to be reduced. Economic growth and low interest rates will help, of course, but there will be a gap to cover. This hasn't to happen suddenly, but in any case, the injection of public money cannot have a permanent character. The recovery fund of the European Union that is under negotiation now is a one-off event, is a one-off initiative. For a relatively small economy, such as the Belgian one should be well aware that economic recovery depends on 2 factors, and we are not the only country with that kind of problem. Those factors are the restoration of confidence in the containment of the virus and the recovery at European level. These are 2 elements over which a government in this country and other countries has little control. It depends on the confidence people have in the future of the pandemic, in the future of the disease. And as long as they are in uncertainty, they will save too much instead of spending. In our country, as in many countries, a federal investment program is hardly possible because a large part of the public investments are made at regional and local level. In terms of private investment, it is possible to strengthen the financial structure of companies affected by the high level of debt. However, for investments, much will depend on demand at home, the reaction of the consumer, and demand abroad, very crucial for exports. So confidence in the future plays also for investment a crucial role. That aspect of trust keeps returning all the time. Where a relaunch must be different, not only quantitatively, but also qualitatively, and I'm coming back to Europe again, is that sustainability must now be really a priority. The European Commission rightly says that the major priorities of its policy prior to the corona crisis must be maintained. And that's about the green and the digital transformation. The Green Deal to make the EU carbon neutral by 2050 and the digital transformation in all areas remain the key priorities for European economic policy. In the first area, the EU can play a leading role globally, I mean climate change. In the second, it's important to reduce and eliminate our gap, our delay with China and with the United States. The time is past when climate and economy were contradictory. On the contrary, there are enormous opportunities in the future. It's about also in terms of Green Deal, about our competitiveness, as is of course the case with the digital revolution. We need to invest even more in research and innovation at all levels of governance, even in the midst of the pandemic. A significant increase was foreseen in the European budget 21-27 that has to be approved also in the coming weeks. In the midst of a crisis that overwhelms us, we must continue to think about the longer term. I apologize that the story is not rosy, but I must add that we hope that the eurozone remains stable. The action of the European Central Bank is helping the weaker countries very strongly. But the Franco-German fiscal recovery plan, complemented by the European Commission, if that is not accepted, the euro area will once again face an extremely serious moment. President Macron and Chancellor Merkel have set aside to boost precisely to keep financial markets' confidence in the euro, to keep that confidence stable. So this new initiative, this package of 500 billion of grants, gifts, transfers, is not only aimed to let the economy recover, it's also a strong signal from the European side that we want to support those countries with high levels of debt, as Italy, Spain, and others. So it's also a clear signal to the financial markets. It's not only about funding a recovery plan, it's also given a signal to financial markets and in the name of the stability of the euro area. Until now, we have succeeded, but it's crucial that we get an agreement on this initiative of the recovery fund in the upcoming weeks. A number of so-called northern countries have not learned much from this crisis and are still telling the stories of the past. It is the countries that have benefited most from the euro and the single market that now threaten to create a major problem. But I'm confident that we, at the end of the day, who will find an agreement. The big exception is Germany. Germany is very characteristic that the debate in Germany on aid to southern countries is now proceeding totally differently from 10 years ago. The country itself, I mean Germany, has given up many taboos internally, such as the budget balance at all costs and states' guarantees to companies. You have to realize that Germany accounts for half of the state guarantees in the European Union. Half of the state guarantees. And it's about enormous numbers that I'm talking. In short, it's another moment of truth in the European Union. Ladies and gentlemen, the globalization of illness started, and that's my second part, it's about the world economy. The globalization of illness started with this pandemic, following the globalization of the economies, of music, of sport, migration, digital platforms, and you name it. Now we are at the globalization of illness. This crisis has also subjected the world to the same regime. I referred to it in the beginning of my speech. Everywhere you see mouth masks, lockdowns, testing, tracing, economic damage, job losses. We are even using the same words. We were and we still are worldwide in the same boat. But that does not mean that we feel together. We are objectively in the same situation, but do we really feel together? Among the major economic players, China, the United States, and the EU in particular, there is distrust. And this is also the case in relations of Western countries with Russia. Distrust. And this lack of trust also exists within the Western camp. I have not to mention the EU-US tensions. And this lack of trust also exists within Asia, between India and China, and there are all many other examples. We must not forget that the period prior to the corona crisis was already an ordeal for the world economy. The trade war between China and the US, which was far from resolved, could even continue, if only because the relationship with China is a theme in the presidential campaign. For me and many others, it's a pointless war, this trade war, all the more because it also damages the American economy. China needs to review a number of trade and investment practices, but the tariff war will not bring a solution any closer. Mutual rivalries, nostalgic nationalism, and the attempts of destabilization via the cyberspace play a major role. And the corona crisis has increased this, I call it, global distancing between these global actors even further. I'm of course alluding to the social distancing. We have also a phenomenon of global distancing. This didn't give rise to new potential military conflicts, I'm not afraid of that. But it is an obstacle to jointly tackle the major problems of our time, such as climate change, inequalities, and economic prosperity. All this at a time when, rationally speaking, I know I'm old-fashioned when I speak about rationally speaking, international cooperation is more necessary than ever. And besides that, there is Brexit. We are heading, keep our lucidity, we are heading for a hard exit from the single market with the introduction of customs control and tariffs from the 1st of January 2021. In the midst, you can imagine, of the corona crisis. It's literally incomprehensible and anti-economic. Even though the damage here will again hit the British themselves, the impact in a number of Western European countries will not help the recovery. So the consequences of populist policies on health and economy are great and a real weakening for the West. We have our problems in Europe, but when I look at the UK, it has the largest collapse in 300 years, economic collapse, and one of the highest numbers of corona deaths, relatively speaking, of course. Its public deficit is nearing 17% of GDP. And in the US, the corona policy is as catastrophic, and the deficit is approaching 20% of GDP. So for me, and I close this parenthesis on Brexit and related topics, there will be no deglobalization. I don't believe that in that kind of word, of concept. But the high point of globalization of trade and investment is certainly over. Companies will rethink their supply chains in order to avoid the risks of unilateral dependence on a single supplier. There is also a new word, there's an old word, reshoring. We were much more familiar with the other word, offshoring, where the process of manufacturing goods overseas was put at the forefront in order to try to reduce the cost of labor. So now we are speaking about reshoring. Reshoring has become a topical theme at the level of nations also, in order to counter excessive dependence in strategic sectors. And the big question, one of the big questions for Europe is, how can the Union protect itself against unfriendly takeovers and unfair competition? How can we protect ourselves better without falling into protectionism? The EU continues to believe in multilateralism, but it should not be the only one in the world to do so. And there's a new awareness in Europe, a new awareness that we have to become much more sovereign, much more autonomous, less dependent in key sectors of other global players. And there is an EU proposal presented by the Competition Commissioner Vestager, and she proposed it, I think, even yesterday. And the aim is to crack down on foreign companies using unfair state subsidies to acquire EU firms. And a part of the strategy to protect key EU industries and the single market is precisely this proposal. It's to protect, let's say, our strategic interests. The document lists the aluminium, steel, microchip, shipbuilding, and car industries as vulnerable sectors. I'm referring to deglobalization, but this slower globalization will also have an impact on the economic model of a number of emerging countries that were heavily focused on export-led growth. That's the case for China and for some other countries. To the extent that we will have a slower increase in world trade due to this slower globalization, it will affect also those countries. It's also true that the corona crisis has further weakened a continent like Africa, with all its consequences on the further impoverishment of the poorest part of Africa, and with its impact on migration, very sensitive in the European Union. Migration declined during the pandemic, but may resume all the more strongly thereafter. Worldwide, extreme poverty has risen by 150 million after decades of decline of extreme poverty. My view, and many others, the EU should continue to pursue its Africa policy, also in its own interests. I'm almost concluding. Generally speaking, in the future, the world will have to deal even more with exogenous developments, such as climate change and pandemics. The devastating fires in Australia and the COVID-19 pandemic teach us that the exception is almost becoming the rule. So the crisis is coming from outside. Crises are not just endogenous, as the eurozone crisis or the banking crisis, specific to our individual economic, political, and societal systems. So this is completely new. Disruptions are not just technological, like the digital revolution. Disruption exists on all levels. It will make our populations even more anxious and insecure. Vulnerable to reason, that's a question, after traumas of the last few months and years, or susceptible to emotions, reason or emotions, long-term or short-term, stability or adventure. I mean adventure led by populists and extremists, solidarity or tribalism. How to prepare for a new crisis if there is no more solidarity in society, or not enough solidarity, and there is not enough political courage at national and European among leaders. These are the main questions. How to turn fear into hope. That's the key challenge for the years ahead. And our future depends on the answer to those questions. That concludes my remarks, my introductory remarks. Thank you so much for your attention.